Ajay is now with us. Ajay, what's happening with Reliance? There is a downgrade that's coming.
Well, the stock is underperforming quite a lot. In fact, not only today. Today, of course, it is specifically dragging the markets, but last 7-8 days, almost 10 days, the stock has lost about 1 lakh crore in market cap because of consistent underperformance after it hit the 1400 mark, which is all-time high. And the reasons which are building up now, and Morgan Stanley also cites the core business coming under pressure and facing headwinds like refining and petchem. In fact, it was visible in the quarterly numbers as well. And refining margins actually have been under pressure for the entire region, and Reliance is not immune from that. In fact, petchem too is on the pricing front. Several of the products under the petchem is favoring unfavorable pricing environment is being faced. Their volumes, of course, they have tried to make up for that, and Morgan Stanley is bringing those ideas in the fore that the reasons were for a downgrade to equal weight from overweight. In fact, last 2 years there's been a very sharp outperformance from this particular stock versus the market, versus the sector, and now it is hitting an air pocket of sorts because of core businesses actually facing headwinds.
Thanks, Ajay, for that. Let's bring on board Sushil Choksey of Indus Equity Advisors to chat about what's going on with Reliance Industries. Sushil, thank you so much for coming on board. Morgan Stanley has flagged off some key concerns with respect to its core business, the energy business of Reliance Industries. Are you also identifying any concerns at this point of time that's worthy of the concerns?
Good afternoon. Thanks for having me on the show. I think, if you look at market conditions at times, the exuberance which was happening in March and April with flow, led by ETF and certain large funds, led to a dramatic rise of Reliance result day and onwards to 1400 rupees per share. Now, assumptions in the market are based on various businesses of Reliance, and the core petrochemical and refining business of Reliance is a key to the entire cash flow which has built all other businesses over a period of time. Now, all of us know what is happening with volatility where crude prices are concerned in the last 6 months. Sanctions on Iran, Venezuelan crude. So, where Reliance sourcing on a long-term contract from Venezuela is concerned, I think they had a 15-year or a 20-year contract for certain quantity of barrels per day, which has got disrupted. Same time, Iran might be offering a heavier discount and heavy distillate crude, which Reliance was getting a high advantage in sourcing and processing crude because Reliance is able to process 150 to 180 types of various kind of crude. So this imbalance would have led to some equation change where refining operations are concerned. At the same time, the market conditions have been a little different between heavy and light crude distillates, which would result into negativity in the current last 2 quarters. And that's the reason we've seen margin going to a single digit, that is $8 to $10 barrel range, where Reliance refining margins are concerned. And I think Reliance is working towards some value addition led, connected and value added from Reliance's refinery products, so petco gasification and various other parameters. So as once we see different kind of products being enhanced, productivity increases, then certain times volume-driven margins will be there in place. But if you are having a premium-led margin, that may deteriorate a bit, and that's what we've seen in the last few quarters.
Right, but after the outperformance, are valuation extremely expensive, Sushil, or they are fine after the outperformance in 2 years?
I think the street was building in too much of positivity led by Jio and retail in last few weeks, and the price ran up. There were a lot of assumptions about Reliance demerger and 3 different various listings, which I also might have highlighted. And these are stories which one needs to look at 2-3 years down the line, how Reliance shapes up. Then around the result, Saudi Aramco investment into Reliance came up in picture. One doesn't take into a factor that Saudis will look at only petrochemical business and not the totality. So how will Saudis come and invest in Reliance industry? That needs to figure out first, whether it will be the core business or Jio, and this will be beneficiary along with. It may be more a deleveraging exercise along with Jio fiber assets at the same time in petrochemical, or is it a new refinery or new value-added products which Reliance wants to put up in the core business and where Saudis are willing to invest. So I suppose such relationship and marriages between two large giants when it happens, Saudi being the largest largest profitable company in the world, Saudi Aramco, and Reliance being India's largest profitable company, how the shift takes place. I'm quite sure there is some positivity in this relationship, which is very visible in various occasions. I think this will take some time, and such events don't happen overnight in single day or 2 days. Reliance needs to put a structure in place where global partnership also benefits. So it's a matter of time. So, the stock ran up in March, April. It is correcting. It will correct 10-15% from where the peak. And one should look at 2-3 year horizon and one should be fine. I don't think so. The current correction is also led by global reasons as well as domestic reasons which are coming up along with the election.
Okay, Sushil, great chatting with you and getting in your view on why is it that Reliance is under tremendous pressure in trade today.